Good morning guys, and welcome to our Saturday Beachside market update. So before we have a chat about the markets this week, I thought I would give you a trading tip that I've found really helpful over the years when it's come to investing in the share market. Whenever I make a decision that I'm going to buy or sell a company in my portfolio, I always wait 24 to 48 hours. Absolutely 100% 24 hours, even sometimes 48 hours. And you'd be very surprised when you do that. Sometimes the emotional decision that you're potentially looking to make dissipates and logic actually starts to take hold. So whenever it comes time to buy or sell something in your portfolio, many times it's because of a price movement. And what we really want to focus on is there something wrong with the business fundamentally or financially, or is the business that you're looking to buy and the reason that you're looking to buy that business, is the decision sound from a fundamental financial perspective and not just from a charting perspective. So you may find it really helpful just to wait 24 to 48 hours, and I bet over the coming years ahead there'll be lots of times where you actually decide, because you waited 24 to 48 hours, that you actually really don't want to buy or sell that business at all. So financial markets this week have once again been trading around, thinking about, worrying about this 10-year Treasury yield, which on Friday actually moved back above 1.6%. The economic data in the US is still continuing to be really strong, and my expectation is, and the trading team's expectation at Trading Mastery, is that we will continue to see really strong gains in transport, leisure, tourism, travel, all of the businesses, banks that are likely going to be able to benefit from the economic recovery. And if we see this 10-year Treasury yield really spike higher to closer to 2%, then I think we're probably going to see further depreciation in the value of many of the tech sector stocks. Have a look at this sunrise. So when it comes to your investing, guys, make sure that you take your time. Don't rush. My dog Charlie loves it down here on the beach in the morning. Absolutely loves it. And the reason why the market is worried about a lot of these tech businesses and the share prices are falling is because many of these tech businesses and the startups have a lot of debt. And those businesses that have a lot of debt are going to struggle when it comes to higher interest rates. It's going to be harder to borrow money, and it's, of course, the actual repayments on that debt becomes a little bit higher, and that also drags on potential earnings as well for the business. So what we're going to see is a continuation of the rotation of money of fund managers who don't necessarily have a constant stream of money in the door. They're going to sell down some of those tech holdings and put some money into some of those broader economic recovery businesses, such as the airlines, the cruise lines, the transport businesses, banks, retailers, leisure, travel, and we're seeing some really strong growth in our portfolio in those sectors right now.